Hi, this is Fiha from FinPocket, and I am back with weekly updates. So, firstly, on the market front, this week markets remained volatile due to uncertainty amongst investors because of the rising number of COVID cases in Pakistan. KSE 100 Index declined by 738 points to close at 47,055 points. CDC Group of UK has announced a $50 million risk sharing facility with the HBL UK, a subsidiary of HBL Pakistan. This facility will increase HBL UK's capacity to support trade with local banks and trade supply chains across South Asia and Africa. On Wednesday, July 28, 2021, the shareholders of Fauji Foods Limited at their extraordinary general meeting authorized the share capital of the company to be increased from 10 billion rupees to 18 billion rupees. Banks' investment in the government papers have almost doubled in 2 years, crossing 13 trillion rupees at the end of financial year 2021, reflecting the growing dependence of the banking sector on the risk-free public debt instruments for making huge profits. On economic front, an amount of 469 billion rupees, which is 52% of the total public sector development program, has been allocated for modernizing infrastructure for accelerating growth. The National Electric Power Regulatory Authority (NEPRA) has announced a slight reduction of 0.21 rupees per unit in electricity price. However, this price reduction is not applicable for key electric customers. The natural gas supplies to various sectors surpassed the 4,000 million cubic feet per day mark in Pakistan due to a constant increase in demand and consumption. This demand is met through gas fields located in different provinces and imported RLNG. The recent update in the Business Confidence Index shows that businesses are now posing confidence in future business situation and are optimistic about the country's direction. The bank's credit to the private sector jumped 12% to a total of 6.82 trillion rupees in the previous fiscal year, like many sectors, including those which got government support and those that played a crucial role in turning the economy around. IMF is looking forward to continuing discussions with the Pakistani authorities on the set of policies and reforms that could form the basis for completing the sixth review under the $6 billion extended fund facility. The country's total liquid foreign exchange reserves declined by $252 million during last week. Reserves held by SVP stood at $17.83 billion, down by $220 million, and net foreign reserves held by commercial banks stood at $7.05 billion, down by $32 million. The State Bank of Pakistan conducted an auction on June 29th in which it sold market treasury bills worth 703.71 billion rupees for 3 and 6 months. The auction target was 700 billion rupees. The cutoff yield for 3 and 6 months were 7.24% and 7.52%. And that's it for this week. We'll meet next week with more market updates.